You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It's 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? It is time for TWIFO. As the name implies, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been binging. If we didn't have enough to keep you busy, we've added not one, not two, but three new shows just in the last 6+ months. One of those hitting just in the last couple of weeks. So make sure you're checking out the European Market Brief that just launched a few months ago. That was on Tuesday, as well as the latest edition, the Hot Options Report, coming at you every day after the closing bell. So a lot of great stuff. No shortage of great content. Yet another reason why you should be subscribed to the full network wherever you find your favorite podcast. And of course, if you're ready to pull that trigger, take the plunge to the dark side, theoptionsinsider.com/pro. Let you join us live, let you get a couple of additional exclusive programs, giveaways, exclusives, all sorts of cool stuff. Theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us in the old CME Group hot seat today. I'm pleased to welcome back on our old pal, Mr. Kevin Green, beaming in from the Schwab Network. Mr. Kevin, welcome back to TWIFO, sir.
Appreciate you having me, Mark. How's everything going?
Things are going well. How are things in Schwab land? A little bit going on in the market, enough to keep you guys occupied, I would think.
Yeah, well, at least the last couple of days, it's starting to pick up a bit. We did see a little bit of a lull there in the S&P 500 for about a week, but now we're starting to get a little bit of action, especially in the vol space.
It is the dog days of summer, after all, so it's supposed to be quiet now. Just no one told the market, at least this week. We're actually putting up some numbers, which is kind of refreshing as we keep on rolling, listeners, into a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. Kevin, it's been a little bit, I should say, since you joined us. Think you remember how this works? Think you can run the folks through a little bit of the light side and the dark side, sir?
Yeah, we could definitely do that. Which one would you like to start off with?
You know what? You are the guest, so you get pride of place. You get to choose, sir. Whatever floats your boat.
All right, actually, let's start off with the dark side so we can end up with a little bit of optimism here. So for the dark side, leading at number 5, NASDAQ 100 down 3.01%. Number 4, we have technology down 3.57%. At Bitcoin at number 3, down 5%. Rough rice down 7.28% at number 2. And for number 1, lean hogs down 17.92% for the dark side. So seeing some red in some of those complexes there. On the light side, soybean oil up 3.37% at number 5. Number 4, we have heating oil at 4.1%. At number 3, we have feeder cattle at 4.76%. At number 2, we have soybean meal at up around 4.93%. And then at number 1, we have palladium up 9.4%. And that's number 1 on the light side for last week, or for this week.
All right, let's get down to business on the vol front, listeners, because there's a little bit of vol action going on out there in the markets today. Remember, you can run these reports for yourselves. Just type CME and CVOL, CVOL, into literally any browser. That'll get you to the CVOL dashboard. Once you're there, if you want to line up with the show, set it to 1 week on the high-low range. That's if you're listening close to the release of the show. If you're listening afterwards, may have to play with that slider a little bit. And then, of course, we like to go to the aggregates tab. It's not a 5-hour show. We don't have time to do literally every product at CME. So we're just going to look at the aggregates today. Going to kick it off in the treasuries. Going to look at the treasury from a yield vol perspective first. Closing on 198.5, getting about 2.25 points back today. That is the high for the week. We've got an interesting week. We've got a lot of names kind of pinning the needle to the upside or close to it. Then a couple taking it on the chin from a vol perspective. So we'll find out which is which. Right now, Treasury yield vol looking spicy again, gaining about 2.25 points. That is the high for the week. The low, 88, pretty much exactly. So over a 10-handle range on the Treasury yield volatility for the week. But then again, it is Jackson Hole week. People have eyes glued to the Fed yet again. So probably makes some sense why we're seeing a little bit of froth back on the yield side. Going out to the metals. What's cooking in the metals? Well, the metals getting a little bit of juice back today as well. Nearly a 16, 15.95 as we're kicking off the show, up about 1/3 point today. That's close to the high for the week, but not quite the high. The high was 16.29, the low 15.60. So metals kind of hanging out right in the middle of their weekly range right now. In fact, interesting, metals vol came in every day this week with the exception of today. Today's the lone gainer out there. Out to the realm of FX we go. FX not known to be a bastion of volatility, hanging out at about a 7.75 right now, gaining about 1/4 point today. So that's actually a decent move for FX. You're starting at a baseline of around 7.5. 1/4 point is a big move. And that is pretty much the high for the week, the low 7.43. So FX vol getting a little bit of a kick into higher gear right in the last couple of sessions of the week. And then going out to the ag product CVOL listeners, that's at a 19.10 as we kicked off the show, up about 1/4 point today there as well. Not at the high for the week, but close to it. The high was 19.33, the low 18.87, so kind of hanging out towards the upper middle end of its weekly range. And then we go down to the Treasury price vol. And again, Treasury's the lowest number on our list by far. It's about 5.32 listeners, so not a heck of a lot of juice to be found in the Treasuries. That said, it's up 0.12 today, so getting a little bit of a lift. And that is the high level for the week, the low 4.74. So decent little range in Treasury price vol this week. But then again, we do have Jackson Hole on the radar. So all eyes glued to that. And then we have the aggregate commodities CVOL. Now we get some of the names that are taking it on the chin this week from a vol perspective. The aggregate commodities CVOL, 32.60 off 2/3 point just today. That is the low print for the week, the high 33.63. So coming off over a point out there in the aggregate commodities basket CVOL. And then bringing up the bottom of our list is energy, aggregate energy CVOL, below a 50, 48.87, coming in 1.75 points just today. That is the low print for the week, the high 51.31 out there. So interesting stuff. Kind of a variety of different tales on the vol front, depending on which complex you're looking at out there, but definitely a vol drubbing on the commodities and on the energy front. But Kevin, I turn to you now as our guest. Where do you think we should begin our journey this week? I did notice in our light side this week, we had a complex you are a bit familiar with, a lot of soybeans, in particular soybean meal and soybean oil. So what do you think we kick things off in the ag, sir?
By all means, let's do it.
All right, to the world of ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the world of ags. Let's get our hands dirty. Go to cmegroup.com/TWIFO, TWIFO, /TWIO. This week an option should also work. That'll get you to the drop down there. And it's an alpha order list, so ags right at the top, listeners. And then we're going to go into product family. We're going to go grains and oil seeds. And then from there, it's just an embarrassment of riches. We could choose soybeans themselves. We could choose soybean meal, which is up nearly 5% since our last show, or soybean oil, which is up 3 1/3% since our last show. And all of them putting up some numbers. I have soybean oil up on my screen right now, nearly 250,000 contracts. So beefy days. Which of these products is drawing your eye this week, Mr. Green?
Yeah, I mean, the soybean complex just in general, let's talk about soybeans because you actually have seen a decent little re-rating to the upside here over the last, let's say, 2 weeks or so. We actually did see a little bit of a bottoming formation, and then we had the USDA crop or prospective crop report that came out, and actually for soybeans just in general, the ending year stocks, the estimate was actually lower than the street's expectation. So you did see actually a pretty decent short squeeze, and you continue to kind of build upon that. We do have like a pro crop tour that's taking place right now, and yields are actually looking pretty good, but you are starting to see some disease out in the Midwest and Illinois as well. So there's a little bit of a concern about the harvest season, which also can fuel into the crush operations, and which is another reason why soybean meal is kind of catching a bid as well. So there's a lot going on in the soybean complex, but if soybeans themselves can kind of maintain this 1050-ish area and try to break above it, you might be seeing a really significant squeeze over the next couple of months here.
Well, let's see what we're seeing on the options front out here in the beans, listeners, because it is action-packed. Nearly 400,000 contracts on the tape in soybeans, 385 to be precise. So that's a pretty dense week out in the beans, listeners. So if you're looking for some action and for whatever reason, maybe your usual stomping grounds of the equities or maybe the rates or maybe even crypto not getting it done for you right now, then maybe the ags are your huckleberry, listeners. And of that, nearly 400,000 contracts, 30% going up in the November contract that has about 64 days to go. So we're going to hang our hats out there as well. By the way, if you're wondering, if you don't follow soybeans on a regular basis, that front future that's going out in a day is at 1033. But then as we tick up into the term structure a little bit all the way out to November, those futures are a little bit higher, at about 1055, 10 double right now. What is the vol, you might be asking, in November soybeans? You can probably guess it's ticking up given all this action out here, and that is the case. 1635. By the way, the beans on that front future up about 1% since Monday, and obviously even more since our last show. In terms of 1635 is where the vol is, of course, up about 1.5 points. So getting frothier, especially when you're starting from a sub 16 baseline. Skew wise, interesting. Last week the puts were pretty much flat, and the calls were where all the action was. They were nearly 8% bid in November, 7.6%. That has come in now as we've seen some of the move, obviously, down to 3.6%. And the puts are now 3.8% discounted. So maybe we're looking at finding a little bit of an equilibrium point out here from the skew. Let's just look really quickly, go out a little bit farther out to see if that is pretty much the case. Yeah, if we go out into the end of this year, beginning of next year, we're still seeing calls around 3.5% bid and the puts about 3% discounted. So it seems like maybe we're settling in after those kind of wild bids we saw heading into the report last week. So interesting stuff out there. And in terms of action this week, I said we're hanging out at the 1055. what strike do you think is dominating the tape, listeners? If you said the par puts, the 1,000 puts in November, you are the winner chicken dinner, going up 23,000 times. So pretty active, including a big chunk of those, 10,600 going up today. Interesting, 2 blocks of 10,600, one on Tuesday and then one today. So it looks like they were closing mostly on Tuesday and then maybe reestablishing today. Interesting that the exact same amount of paper going up both days, and then about less than 1,000 the other 2 days, Monday and Wednesday. By the way, if you're wondering, OI about 20,000 on this strike. So par puts, interesting strike there, Kevin. And just for a note, I was digging in a little bit while you were talking to see if I could find the pricing on these November par puts. Looks like they went up today for average price of about $8.70. So November 1,000 puts about $8.70. Does that float your boat, Kevin, or is that too rich for your blood? You're saying sold to you?
It kind of just depends on where you think the beans are going to go here over the next couple of months. We know that November is really kind of the contract that's being priced out here. We will have harvest taking place here in the next month and a half or so. And there has been this concern pretty much all year that you're going to have a significant yield this year, and that it's going to far exceed any type of demand out there, and we'll continue to see a buildup in storage. But you also have to think to yourself, Mark, are we starting to see a short squeeze in a lot of these products like soybeans that has been very depressed over the last year and a half, 2 years? Wheat is another one. I know we probably won't talk about that, but look at the wheat complex as well. It's just gotten completely demolished. But at some point, you got to think that some buyers will step in. So that seems a little bit expensive if you're a buyer of them, but maybe if you're a seller of those puts, maybe there's an opportunity there. If you do believe that we will maybe see some hiccups when it comes to the harvest process here.
Pick up a little $9, get some soybeans a little bit lower. Could be intriguing, listeners. Since we're talking soybeans and the whole complex is lighting it up, let's dive really quickly into the two that were lighting up our movers and shakers report this week, in particular, the oil and the meal. Let's start with the oil because it is the most active of the two. 220,000 contracts on the tape for the oil. That's on top of, we just talked about, nearly 400,000 for the soybeans themselves. You throw in the meal, that's another $150. So you're talking 750,000 contracts more going up in the soybean complex this week. So a very hot complex. If you don't trade ags, let alone the beans, listeners, might be worth at least casting a glance in their direction. Soybean oil right now, 53.5, up about 1/3 of a point since Monday, or about 1/4%. Obviously, if you go back to the end of our show last week, up more than that, up about 3 1/3%. And of that 220,000 contracts, 40% looks like they're going up in the Dees contract that has 92 days to go. So we're going to hang out there. Kevin, I know a lot of our listeners, maybe they dally with the beans, but maybe the oil and the meal is a bit of a bridge too far for them. What are your thoughts on what's going on out there in the oil, sir?
Yeah, so for soybean oil, what's really has been the focus over the last month or so, not only when you're looking at the trade deals between the U.S. and China, which we have, for the most part, have not been able to export pretty much anything in the soy complex of significance to China this year. There's a thought that maybe a trade deal will kind of lead to that demand going up, not only just for soybeans itself, but then also kind of reducing some of the supply of soybeans, which could then create a little bit more of a supply constraint for oil as well as the meal. But what also is actually happening too is this biodiesel rule that the Trump administration continues to kind of, I would say, even flip-flop over the last, let's say, month and a half, where they are maybe providing exemptions to leveraging, let's say, soybean oil, if you will, in the mixture of creating biofuels. And there was a report today that they are looking at maybe having some exemptions for small refiners, but for now they have not made a decision. And I think the complex itself believes that the Trump administration is not going to reverse its decision and increase the amount of soybean oil and other oils as well, other vegetable oils that are going to be utilized in biofuels, because that's a very big thing in Iowa, which anytime we get news that crosses the tape around biofuels, usually soybean oil actually gets a nice little bit to the upside as well. So that's really kind of what's driving this move today. In the short term, longer term, there could be a trade deal between China and the United States and that actually could be huge for the grain complexes as a whole.
Never too early to play to the caucuses out there in Iowa, Mr. Kevin. But you're right. So, it's an interesting week when the American Soybean Association is making the headlines, making the news out there. Things are wild in the soybean complex out there. Let's look really quickly in the oil here, listeners. Like we said, 40% going up in the DEES contract. What is the vol in December soybean oil? You might be asking. It's nearly a 32, 31.85, up about 3.6 points. So decently frothy given all the things we break down on this show. You look at all the assets that trade at CME. You're hard pressed to find a ton that trade much higher than a 30. You got to go into energy with our old pal Nat Gas hanging around 55 or 60. And then, of course, the crypto assets, those all bets are off for those. But outside of those, a 32 is actually a decently lofty vol level. And in terms of skew, we have not much evolution on the week, which is kind of interesting given the action we're seeing out there. The calls last week, 3.4% bid. This week, 2.8% bid, so not much evolution there. The puts, 2.6% discounted this week, 3.4%. So again, not a huge evolution on the skew front. And the hot option out there in soybean oil this week was the 50 puts in December. So I said we're hanging out at about a 53 3/4. Once again, we're going to the downside, Kevin. So that's kind of interesting. And a little bit farther out in the year. In the soybeans, it was in November par puts. This time we're talking DEES 50 puts. Almost an analogous contract in many ways. Going up, let's see, a total of about 13,000 contracts, including the big print for these is today. Looks like about 7,500 of these puts going up today. Let's see if I can. Doesn't seem to want to give me a price for these bad boys, but interesting stuff out there. Maybe if I hit the right button, it would probably help. All right, so 7,500 today, about 2,000 on Tuesday, 1,700 on Wednesday, and 1,800 on Monday. By the way, there's only 7,500 contracts left open on this strike, so they could be bailing. Looks like they were bailing on Tuesday and Wednesday. Maybe they are bailing on the remaining OI. We don't see that line up as tightly as we're seeing there very often. I'm looking for a price for you here, listeners, Kevin, and I can't find you one. So maybe while you give us your thoughts on these 50 puts in December, I'll see if I can find a price for you, sir.
Yeah, that's actually a very interesting level. If you kind of go back in June, this is really where the focus on this whole biofuel debate actually did take place, where you did see a nice little run to the upside here. And it has been able to maintain that, let's say 51, about 51, spot 50-ish area. And that's been leveraged as an area of support. But if we do see these exemptions, it appears it's like 190 different small refiner exemption requests that are 190 refiner exemption requests that have been submitted here. If that does get approved and they do get exempt, you could see soybean oil crushed pretty aggressively right now. And it does appear that the market is saying that they will not be approved. So that seems like a make or break event risk type of contract there. If you do believe that this is going to be reversed and you're going to see exemptions, that means that the supply of soybean oil and vegetable oil just in general goes up, which then prices kind of push to the downside there. That's where this put would be a winner if you're a buyer of them.
Of course, they're all the way at the bottom of my list, Kevin, but I found it for you. $2.13. So does that change your mind at all? Is that too rich for your blood? Or you think that is a fair price for going all the way out to December for a little bit of downside, sir?
For a little bit of downside, depending on if you actually hold the contracts. If you're a bona fide hedger, that could also kind of sway. You're looking at $48 on that break even, though. That's pretty tough. You're talking about a pretty decent flush from here. And once again, it's event risk call. So there's several different ways that you could do it. You probably could look at a put spread Mark, to try to maybe offset some of that premium, just given the fact that you're looking for around a 10 point, about an 8 to 10 point readjustment to the downside for those puts to really pay off.
Well, Kevin, I don't think we've ever done this on the show before, but because you're such a beans guy, let's do the full trifecta. Why not? All three of the big beans on one show. I don't know. Can you handle that level of excitement, Kevin?
Yeah, let's try it.
Let's do it. Let's finish it up with the meal, listeners. Again, you're getting the full suite today. So strap in for some hot soybeans action. To the meal we go, listeners. And where is soybean meal trading right now? Right around a 296 in that front future, 295.90 Again, that's up 12.5 points or 4.5% just this week. That one's going the way of the dodo in a day, though. If you go a little bit farther out, we're hanging out right around, it looks like a 290 to a 293 if you go a little bit farther out. So again, as the Ags are wont to do, tale of two different term structures, the front and then the longer term stuff. And the longer term stuff seems like it's actually shedding a little bit of value out here this week. Either way, a decent amount of paper, 151,000 contracts on the tape in the meal. Mr. Kevin, we've been on quite the soybean journey so far this show. Take us home. What are your thoughts on the soybean meal this week, sir?
Yeah, soybean meal has been it's a little bit of a tougher trade right now. If you kind of look at the cattle complex, and I know we talked about cattle earlier, you continue to see these estimates of lower herd sizes, if you will, and that could also hurt the soybean meal market just in general, right? Lower demand. You're also seeing a significant drop off in lean hog prices here over the last couple of trading sessions. And that also creates a little bit of a concern. Let me go back to cattle real quick. You are maybe seeing a near-term top when it comes to the demand of cattle and beef just in general. And so that could actually have an impact when it comes to soybean meal. And then exports have been, for the most part, lackluster. So this is kind of a tougher market to kind of play. And once again, very volatile. Once you get a news item, it can run pretty aggressively for a week or 2 weeks. And until that news item fades, it's really hard to short it. But at the end of the day, the demand picture doesn't seem as great as maybe some of these other grain complexes here.
Let's see what kind of picture is shaping up out here in soybean meal, listeners. And again, it's about 150,000 and exactly 50% of that, Kevin, 50.0% going up in the front contract that goes away in 1 day. So we're playing a little bit of the 0-day game in soybean meal, listeners. So if you like your contracts very near dated, then maybe soybean meal is the product for you. Again, so it's kind of hard to talk vol and everything else with 1 day to go, listeners. If you look a little bit farther out, what is the vol, let's say 30 days out in soybean meal? Very different term structure between what we're seeing in the front portion, which is kind of wild. And then you go a little bit farther out, 30 days. Seems like things settle down. You go from nearly a 30 vol in the contract expiring tomorrow to about a 16 vol if you go out to October. So vol gets cut almost in half, which is, again, a fascinating bit of evolution you see almost in the ags and nowhere else, where they have these planting and harvesting cycles. Two very different flows going up in the term structure, which is always interesting. But these 0-day contracts right now going away tomorrow. Well, it's like last week, again, heading into all these reports, we saw a strong bid on the call wing throughout the term structure. These calls were 5% bid. The calls going away in 5 days were 12% bid last week, 11% if you go out 7 days. Strong bids kind of across the term structure. You go out to October, they were 14.5% bid. All of that is gone now as the event risk has kind of come and gone. The calls going out tomorrow, 2.2% bid. The calls going out next week, 5 days, about 5% bid. So again, most of that upside premium pretty much getting cut in half. Nonetheless, it was near-dated calls that are topping our list here, Kevin. I said we're hanging out at a 295.90 in that front future that's going out tomorrow. And folks are playing fast and loose with the 295 calls expiring tomorrow, Kevin. That is the top dog in the soybean meal this week, going up over 13,000 times. Most of that, 10,100 going up yesterday, 2,200 on Tuesday, and just a scant 800 today. Worth noting, the OI is only 4,300, so a lot of back and forth on this strike, which is kind of fascinating. Kevin, 295s, are you a big fan of some effectively 0-day trading in the soybean meal? Is this a new paradigm for the ags here, Kevin?
That might be another sign that we are just in a little bit of a bubble just overall in this market. But no, that's a little bit of a risky trade. Maybe there's a hedger that's out there that's trying to take in a little bit of premium. If they are selling those calls, if they're buying them, then maybe they're a little bit optimistic. But when you look at the meal complex, once again, the chart doesn't look great. The soybean crush operations here in the United States has ramped up tremendously over the last year. I think we actually rolled out 8 new operations just this year alone. So you have a lot of supply, you have a lot of capacity when it comes to the crush operations and the make mill. And once again, just hasn't been the demand story to really kind of thrust this. And I don't even think you really see that aggressive a demand here in the United States until you see a complete reversal in the live cattle space. And it does not appear like that's going to change anytime soon. It seems like we're stuck in our ways with lower herd sizes, higher weights, which is a lot cheaper to maintain, and also, once again, kind of deserves a premium for those ranchers and those that process.
Since you've been hitting on the cattle, that's obviously a big point here. We talked about it a lot on the Futures Rundown yesterday with our guest, who said a lot of their clients are out there hedging a lot of their production with the feeder cattle futures, and they're having a hard time. The futures are up so much, they have to finance those futures after all. So they're looking good, but still it's a struggle to finance some of those positions sometimes. Feeder cattle this week coming in number 3, up nearly 5%, 4.75%. And again, these are products that used to be kind of trade by appointment, now putting up about 32,000 contracts this week. So interesting stuff out here. By the way, feeder cattle 356.57, up nearly 10.5 points, or a little over 3% just since Monday. So kind of a strong week out here, as Kevin was just alluding to. Interestingly enough, 33% of that, about 32,000 contracts, going up in the contract that expires in 7 days. So some near dated paper out here in the feeder cattle. A similar story on this weekly calls that we saw at some of the other ags we're just talking about, which is huge bids to the calls last week. They were nearly 13% bid. By the way, what is the vol, you might be wondering, in feeder cattle? It's an 11 1/3 in this front contract. But if we go out a little bit, let's go out 60 days. Now you're talking a 19. If we go out 90 days, you're at about a 20. So a little bit more juice if you go out a little bit farther, even though the near dated stuff looks like it's been crushed down to about an 11. And what is the hot option, such as it is out here in feeder cattle? Looks like nothing even broke 1,000 contracts, Kevin. Our biggest print are the 336 puts, nearly $10 in the money puts, going up about 941 times. These go out in about 7 days, Kevin. So you kind of mentioned feeder cattle. It's a big story out there right now. It's kind of the other side of the ag story that we're seeing out here. And anything catching your eye in the world of feeder cattle, sir? And your thoughts on the notion of, back in the day, I never would have recommended retail trade feeder cattle. And I would still say, maybe be cautious before you get into these, but volume-wise, they're starting to become at least a little bit more approachable for people. They're not doing, 1,000 contracts a week anymore.
Yeah, you are seeing not only just when it comes to feeder, but live cattle too, right? Because there's two different contracts. The feeder is the small, calves that you're trying to raise into live cattle that you bring to slaughter or have for milk and things of that nature, right? But it is a story that goes underreported, Mark, for a very long time. This is not a new phenomenon. This has been going on for years now. We have drought conditions. I'm out in Colorado. That's where I live, right? And so we have a lot of ranches that are out here. I have friends that have cattle on their ranches and things of that nature. Droughts impact trying to raise cattle just in general. And so water prices have gone up. It's hard, it's scarce. So you had two things that you could do: either pay higher prices for all the resources to put into your cattle. That goes with grains, that goes with water, or you constrain the amount of cattle that you have that you're trying to bring to market, and you beef them up, though. You get them the nice weights. And if you look at it right now, herd sizes are going lower, but if you're looking at weights are like absolutely skyrocketing to the upside, and that's how you're getting paid. And this is exactly what's happening right now. Live cattle has been in short supply, feeder even more short supply. And the last thing that's also happening here that, once again, underreported, when you're looking at some of these, this bird flu situation that's going on, it's been impacting a lot of these. Poultry has been impacting livestock, and cattle has been one of them. At first, this time last year, I think the death rate, if the cow was pregnant, the death rate was like 30%. So at some point, they were actually at risk of not even being able to replace themselves. So prices continue to move to the upside here. And that's why you are continuing to see the squeeze up until a point. Maybe we see something actually happening in the fundamental landscape over the next couple of years that changes the supply dynamics. Given the trade deal that we have with Europe right now, doesn't seem like that's going to be likely. Maybe demand actually goes up. And if and when we do see a type of break here, it could be very aggressive to the downside. I'm talking very aggressive. But right now, the market continues to see it up to the right. volume looks okay. But at some point, we might see a pullback. And in fact, the October timeframe, pretty much middle of October, is usually when we see a readjustment back to the downside on a seasonal basis, because a lot of things are being brought to slaughter. Supply is hitting the market, and we are seeing some cracks in demand on a week by over week basis when it comes to slaughter rates. So we can nerd out about that all day.
You're loving yourself some cattle. Well, let's keep this movable feast going since we're hitting all the ags and the cattle. We mentioned feeder cattle, but if you want the more active contract of the two, listeners, then we got to go to live cattle. And I was talking about the volume we're seeing in feeder cattle. A different beast here in live cattle. You're 30,000+ for feeder cattle. You're talking 4x that, 121,000 in live cattle. So yet again, these are numbers. I mean, we talk about silver all the time. Silver will readily do 30 to 60,000 contracts. There's a lot of complexes we talk about that are a pale shadow of most of the FX complex, are a pale shadow of these numbers we're seeing in live cattle. So again, and it may be an intimidating product category to you, but volume-wise, the numbers are there to at least make it at least a little bit liquid. You can kind of get in, you can get out without getting run over. Where is live cattle hanging out right now? Right around 234 3/4 in that front future. Has about 15 days to go, listeners. That's up nearly 2% just this week. I'm sure if we dial it back to the end of our show last week, it'll be up even more. Vol-wise, we're seeing vol coming in across the board, which is kind of interesting. Again, some of that may be big event risk coming off the table. We're seeing a little bit of a vol crush as a result, even though it's only a point in that front future. But I say only a point. We're at a 16, so a point means a lot when you're hanging out in the mid-teens from a vol perspective. A third of the paper went up in the October contract that has about 43 days to go. So we'll hang out there, listeners. And skew-wise, it's been interesting to watch. The puts were all the rage last week. 14.1% bid were the puts. That has been cut in half to about 7%. Same deal if we go out to November, 7% bid last week. Actually, they're a little bit more bid this week, 9.2% bid. So it does seem like there still is a bit of healthy interest in the puts, which is maybe getting to what you were saying before, Kevin. If we do fall out of bed, it might come fast and hard out here. But call-wise, seems like no interest in the calls at all. The calls are flat in the contract going away in about 15 days. If we go out 43 days, those calls are 2.8% discounted. 3.6% discounted out to November. So no love for the calls and a fair amount of interest to the puts. It sounds like the options market is kind of backing up what you're saying here, Kevin, that folks' interest and or concern is to the downside here in live cattle. And what is the hot option out here this week? Listen, it looks like it's the 234 puts going away in 43 days. These are the October puts. So these are the at-the-money puts, listeners, going up about 5,500 times. Looks like the big day was Wednesday. 2,100 on Wednesday, 1,700 today, and 1,500 on Tuesday. Looks like pretty much all opening. So some straight at-the-money puts, Kevin, going away in about 43 days. You know, that seems like somebody maybe if they're buying those and it was all opening, maybe a little bit spooked at the near-term process. Maybe they're going back to what you were saying earlier. They think if we start moving, they're not even going out of the money. They're going pretty much straight at the money. What are your thoughts, sir?
Yeah. And if you bring up like a seasonal chart, last 15 years or so, usually in October, the October contract is usually the one that actually does see that re-rating to the downside. Once again, there also was actually some activity on the 224s as well. So maybe there's also a put spread that's been kind of baked in there for that trade. But they might be a little bit spooked, looking for some action to the downside. Maybe, once again, hedging a portfolio, hedging physical, who knows? But this could be, this is one of those charts where if you tried to pick a point over the last year to try to short it, it's you're getting ran over. So this trend is definitely to the upside. You just think to yourself, at what point do we actually see a break? And do you start seeing a rotation when it comes to prices for consumers going away from beef products to other products like poultry or pork for that matter, because of the price of beef just being so expensive? It hasn't happened yet, but there may be a breaking point at some point, at some level here, some price point where this trader might be saying, hey, something could actually happen, and maybe we do see a re-rating to the downside. And buying at the money for a livestock product like this, it's a little bit scarier. But obviously, you're paying a little bit of premium, but you're also paying up for that delta as well. So let's say you get a little bit of a move to the downside. The contracts are liquid. I don't know. They do a phenomenal job there at the CME, but there is still a spread to that, to those options where you're going to have to work on order. So if you go too out of the money, you might not have enough of a market there to kind of get in and get out, even though you get a decent move to the downside. Whereas at the money, give yourself a little bit more flexibility in order to try to get out if a 2-point or 3-point move actually does happen and in your favor.
Looking here, speaking of that price, looks like those 234 puts, you're right, they're not giving them away. $5.36 average price. So again, you're getting a lot of protection, and as Kevin mentioned, you're getting some of that delta that you're paying for there as well. So interesting stuff. By the way, I see in our chat here, Options Queen saying all this cattle talk is wild. These products are so intimidating. That's why we're doing the show, Queen. Maybe make them a little bit less intimidating, a little bit less, scary. This wild world of cattle. By the way, Kevin, I got a good idea for a new show. What do you think? Cattle Talk with Kevin. What do you think? The hot new hit on the network?
I'm not sure if it's going to be hot, but it'll be a hit for sure. I can tell you that.
The alliteration alone will bring some folks into the show. There we go.
I can bring you out to Colorado, and you could go to a couple of these slaughterhouses. They don't smell too great, but there's one place I just want to say this. So I'm going on a camping trip tomorrow down south, basically southeast Colorado, and it's probably the biggest location that I've ever seen in my life, Mark, where it has cattle. As far as the eye can see it, it's actually at a slaughterhouse. It's one of the larger ones in the nation. But as far as the eye can see, and what's so funny, we camp kind of maybe 30 miles away, and there's just this haze over this town all the time. It's so crazy. So cattle is a very interesting market. And it's really interesting to see kind of the physical cattle market and how it actually operates and going into auctions and that whole process. It's very unique.
I like it. Well, you have to go down to your camping spot and just run around with your iPhone, just play the show for them and see what they think. Look, we're talking cattle the whole time. They'll love it. We'll convert all those cattle ranchers to listeners here of TWIFO. Well, we've done a deep dive into all things ags and related products like cattle. We got time for maybe one or two more products and or complexes. What's floating your boat this week, Kevin?
If we're kind of looking at that list, I mean, we've already hit the beans.
We can go beyond the list if you like. Not all of them are active options products, Not a ton on the Bitcoin front, unfortunately.
Let's do energy.
All right, then.
I love energy.
All right, to the wild world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. Welcome to the wonderful topsy-turvy world of energy out there, listeners. Go into that drop down. We're finally popping out of ags. Going to go down 2 slots to energy. And then in product family, I'll let Kevin choose. The big dogs in energy are obviously WTI and nat gas. What's floating your boat this week, sir?
Let's talk about WTI. We got to do it.
All right. I know you're a big...
gas is fun, but WTI is a little bit more interesting.
It's like I knew that or something. It's like I already pulled it up on my screen here. How wild, Kevin. It's like you've been on the show once or twice talking about WTI. Well, to the world of WTI we go, listeners. And hanging out at a 63.5 in that front future going away in about a day. That is getting about 1.5 back or about 2.5%. So a nice little move. Of course, not enough to break into our top 5 from this week. 435,000 contracts on the tape. So that's kind of going back to a more seasonally quiet volume week. It's a little bit lighter than average out there, I would say, but not super quiet, not super active either. Looks like about 36% is going up in the October contract, has about 27 days to go. We will hang out there. What's the vol in October WTI? You might be asking, at about a 29, off about 3.5 points. Remember I was saying before, that 30 is a nice barometer. Most of the complexes we're talking about going to be below that, not many above it. And WTI right at that line. Kevin, I know you've been on here for a while. You were talking before, I think last time you were on, about how that 65 handle is a magical level in WTI. If we blew through it, it was kind of look out below. We've obviously bounced around since then. We obviously are below it right now. What is catching your eye out there in WTI this week, sir?
Yeah, you are seeing some buyers kind of stepping in at around that 61.50-ish area. I'm still concerned about WTI being below 65. I think that is also, in my opinion, an economic slowing indicator. And we'll see if it actually is able to crush, because the next level that you're looking at is around 57 and a half as an area of support. But Mark, couple of things that are happening, and keep this one on the radar. And I really try to tell people, like, really keep this one on the radar. Two things happening. If you look at the net positioning for speculators for Brent crude, and you add that to WTI crude, one, first time net speculators have been negative when it comes to contracts. So like they're super bearish right now. First time. And there's a significant amount of short interest right now when you're kind of looking at the net positioning just across the board for managed money flows as well. And then underpricing of geopolitical risk. You did see some selling because of the Russia-Ukraine conflict. If you're really an energy trader, you know that this has already been priced in, but the market's going to trade however it wants to based on the news flow. But right now, if you kind of look at the events, it probably is not going to end the way that President Trump wants to. And it seems like it probably will escalate a little bit further. And if that's going to be the case, there's probably a little bit more upside potential here. And then based on that short squeeze by those speculators, you already have maybe some of that dry powder or that powder keg kind of building up for release to the upside. Maybe something that doesn't sustain, but once again, something that kind of rare position that we're at right now. Price action, price level, concerning. Structure under the hood when you're looking at commitment of traders might be a little bit more constructive though.
All right, listen, let's get out, see what's lighting it up out here this week. And like we said, a decently active, but not blowing the doors off week here in WTI from a volume perspective. We're hanging out here in the October contract, about 27 days to go, listeners. Skew-wise, we're seeing about the same bid to the puts this week that we had last week. They were both around 2.5% bid, so no real evolution there. The calls were literally flat last week. Slight discount this week, about 1.2% discounted, so no real evolution on the skew. If we go a little bit farther out, let's go look into, let's say, the beginning of next year and the end of this year, listen, just for curiosity. And we are starting to see, looks like a decent bid creep into the puts there, about 7% bid. And the call is about 7% discounted. So starting to see more of a, dare I say it, a modest equity skew creep in as we go a little bit farther out. We go all the way out to, farther into next year. Then, of course, you're seeing a pretty pronounced bid to the downside, 11, 13% to the puts. So kind of interesting stuff. Does seem like the impetus, the concern going out is to the downside. And maybe that's also why we see the October 60 puts dominating our tape this week, going up about 12,000 times. But you know what? As I say that, well, we'll get to those first, and we'll get to these others in a second, because we also have some action on the double puts going up in December. Let's get to these October 60s first. They went up about 12,000 times. Looks like today was the big day. 4,500 contracts, 3,500 on Tuesday, and then about 3,000 on Wednesday and about 1,400 on Monday. Looks like remaining OI today, about 23,000. That makes sense. 60, kind of an important psychological level. If you're wondering, listeners, those puts going up for about 90 cents. So if you like that level, you're not getting a ton of duration. You're getting some. But maybe you like that as a bit of a flyer. Maybe you say sold to you. Not even a buck. And then also the actual volume leader here is going out to December. That's the double puts, the 55 puts. Again, it's all to the downside, listeners. 18,500 of these bad boys going up this week. And a good chunk of that, about 12,000 of that, was going up on Monday, listeners. So just a ton of action out there, listeners. 3,100 going up today. Let's see if I could find really quickly some prints on those. But 3,100 today, 2,000 on Tuesday, 1,700 on Wednesday. It seemed like opening most of the week as well. So 55 puts, listeners, going out in December. Let's see. If you want October, you can get those for about 19 cents. So a nice deal out there, listeners, if you're looking. Here we go. December 55 puts, $1.20, listeners. So there we go, Kevin. We got Ox 60s. 90 cents going up for size this week. And then we've got even more of the Dees doubles going up for about $1.20. Any of those float your boat? Or, you were just saying the downside is still kind of where your interest and or concern is. It certainly seems like that's the way the skew is pricing up. What are your thoughts on those puts, sir?
Yeah, the $60 puts are actually very interesting because if you look at those break evens, it's around what, $59.10. So maybe you do have some buyers trying to step in at the $60 level, trying to keep those out of the money. And then it does provide maybe an opportunity for an entry here. Maybe we do see a pause in Fed cuts in September, but maybe out in December, maybe we get a little bit more love. Who knows how this is all going to kind of shape out here. But once again, I kind of look at the commitment of traders report, and usually when managed money is on one side of the boat, they're usually at the end of a cycle, not at the start of one. So if that trend's going to kind of continue, you would hope that you're kind of closer to the end of this down move rather than the beginning. So and it's an interesting actually trade. You are receiving some premium, and if you do believe that there's some perceived value at the $60 level, that's a way to be able to get some exposure. And it's still a bullish trade, and you're just asking for crude to stay above the 60 in order to profit off of that one or receive full profit.
All right, Mr. Kevin, that music means you have survived another go-around. We'll just call it the cattle seat this week, the cattle and ag seat with a little sprinkling of energy on top as some spice, sir. But before we go, if maybe something else is catching your eye or there's another quick complex we didn't have a chance to get to, you wanted to highlight it or mention it for our listeners, now is the time, sir. The floor is yours.
Yeah, I would say, natural gas, kind of look at that one seasonally. We might still see another week or 2 weeks to the downside, but we are going to get close to the end of injection season and the start of draw season. And so that preparation usually happens in the beginning or pretty much the middle of October. So keep your eye out on that trade. That could also be another one that is impacted by geopolitical risk. So I appreciate you having me on, Mark.
Always a fun time, sir. Enjoy your sojourn to the cattle country. Remember, hold up that phone. Let them all listen to the show. They'll be converts in no time. Cattle Talk with Kevin coming to the Options Insider Radio Network. We're going to poach you just for the cattle show, Kevin. Let's see if the Schwab folks will lend you out. They don't talk cattle. They won't mind, all right?
Yeah, it might be okay.
All right. In the meantime, Kevin, if folks want to check out all the cool stuff you have cooking over there in Schwab land, where should they go? What should they do?
Yeah, you can check me out on Twitter at KG Bull and Bear. You can also check out the Schwab Network. We're there 24 hours a day, 7 days a week. We're streaming, and I'm about to do a hit right now. So appreciate you having me on. Always a pleasure, and I hope that everybody is prosperous when it comes to their trading here.
All right, sir. Good talking to you. Go check them out over there in Schwab land. You know where to find them, listeners. That's going to do it for TWIFO. Not going to do it for the network, of course. Back again in about an hour to talk all the hot options paper that is lighting up the tape on the Hot Options Report. And then, of course, back again next week with our usual array of content until we're back again next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.